What do we need to know about the numbers in JPMorgan's business? Because as Matt says, sometimes the headlines look darn good.
And the quarter was darn good. It's just that I think there are some bullish investors out there that wanted more. And if you did, so on today, they're underperforming. But if you looked at year to date, if you look at their valuation, if you look at their year to returns, you look at their profitability, all very, very good, executing well. Think that, maybe some people just wanted some more there. Goldman Sachs, also strong quarter. They did miss on equities trading. So, these numbers are hard to predict. But I think, most people, including myself, if you had seen sort of that upside would give you sort of further confidence in the momentum going into the next quarter. But the M&A advisory business, huge outperformance there. We think they probably outperformed most people in the quarter. They're the lead in that revenue. They announced this AI program. There's details. We're going to have to wait till January for details, but that signals that efficiency is going to get better. Contrast, two companies that are really performing very well to two companies that are, I think, have a lot of runway ahead of them, and that's Wells Fargo and Citigroup.
Can I just ask, before we get to Sri, because I've already asked him like 10 times today, why do the analysts consistently underestimate what these banks are doing? And it can't just be to get on the good side of management, right? When I see this morning, before any earnings came out, I saw stories about which bank was going to beat estimates. So when I see bank expected to top estimates, I wonder why analysts don't add more to the estimates. What is this game all about?
Well, first of all, trading, and when it's capital markets revenue, that really is the source of the upside. That is very tough. And banks are not going to guide you.
Right.
They don't really have an incentive to guide you. Because by the way, the last couple of days of the quarter could be horrible, or you don't know what's going to happen. And so I think banks are going to tend to guide conservatively. Analysts are going to tend to be conservative, right? Because that, and by the way, that just is not something that people bake into the run rate. So as I said, we're positive about the momentum in trading, the asset levels, et cetera. But I think if you're, forming estimates, you are going to tend to be conservative. And that's why you can get upside, especially if the strength comes at the end of the quarter. It's just hard for the estimates to catch up.
Yeah, totally get it. All right, so we care about JPMorgan's results. We also obsess over everything that Jamie Dimon has to say. He never disappoints with something that is highly quotable. In this case, it was when he was talking about a cockroach. Check it out.
You should assume that whenever something happens, we scour all process, all procedures, all underwriting, all everything. And, we think we're okay and other stuff, but my antenna goes up when things like that happen. And I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one.
All right, that, of course, was Jamie Dimon earlier today on JPM's earnings call. Sri, come on in on this, because you're reporting on the quarter and, most importantly, what Jamie Dimon has to say about the macro.
So Jamie Dimon has been running the biggest U.S. bank, which has a bigger market cap today than its three closest rivals combined. He's been doing that for nearly 20 years, and he didn't get there and he didn't stay there just on the back of sitting on his laurels, right? He is paid to look around the corners, and he is right to point out that the underlying numbers might be great. They might be marching toward another record revenue year. But when you see some of these problems, you initially try and dismiss some of them as idiosyncratic. But if enough of them start popping up, that becomes a concern. So that's why when Dimon says my antenna goes up when things like that happen, we pay attention, especially because in the last few days, we've been seeing some action in certain corners of the credit market where it does appear that there is some fear seeping into the markets. Dimon specifically flicked at the publicly traded BDCs that hold a lot of these private credit investments. And if you look at the discount to the net asset value that they're going at, it makes you worry about what's happening with some of the other non-traded vehicles. Will there be mass redemptions, and will there be domino effects off of that? And Dimon also points out that he feels like they're feeling very good about everything there. If you look at their numbers, you will not see any cause for stress, dismay, concern. But Dimon is right in saying eventually the cycle turns. And when it does, he thinks that, I suspect, when there's a downturn, his words, you will see higher than normal downturn type of credit losses in certain categories. And that's an important one to keep in mind, because what he's saying is your recovery rates might not be as great as you imagined, and that will impact the firms and that'll impact the investors in those firms.
I want to ask about Wells Fargo. I'm so thankful that Bloomberg Radio has such a great program in the mornings. Nathan Hager and Karen Moscow were talking to you, Alison, before I even got to work yet, and I get here pretty early. And you were saying this is really going to be the news of the day. And it has been the outperformer of the day because...
Can I just say, finally?
Well, because...
It's been long in coming.
So what's the story with Wells Fargo? They raised their return on tangible equity.
Yep. So the key metric for banks, return on tangible common equity, valuations, price to book is how a lot of investors value these banks. It's based on the return on capital. And, Charlie Scharf had said years ago, we're going to put 15% out there as a target. We'll revisit it at some point. They're running at 15% year to date. They upped that target to 17 to 18%. The asset cap is lifted. They showed a lot of progress that they've made, but they also showed some opportunity. And here's what I think is interesting. So one of the biggest areas of opportunity is the consumer unit. When we had Lori Beer from JPMorgan, the CIO of JPMorgan, talk about where she sees big opportunity, she actually talked about this at JPMorgan's Investor Day. Also, the consumer unit. Also, like a lot of what she talked about in terms of how technology was going to aid the bank was productivity in the consumer unit. Mm-hmm. So we're hearing that from Wells Fargo. So that really gives me confidence that this is a number that they can shoot to. Citigroup, by the way, I think they're also kind of showing the path, right? So Citigroup talking about the fact that they are sort of 2/3 the way there with their transformation. And we have Banamex coming, it's pushed out a little bit, but I think showing you the path that, could that be Citigroup? Again, talk about an even longer time, but could Jane Fraser finally be the one to get it done?
And I will point out, with Wells Fargo now up, 8.2% for the day, it's their best day since election night, since Trump came back to power. This could be Wells Fargo's best day since then. So that is the power of putting a target out there. And I point that out again only because in a couple of weeks, you will have Bank of America with their investor day, their first investor day in 15 years. It has also been the worst performing big bank stock this year, up only, 14%, 14 and change. It is important for Bank of America to approach that investor day with a mindset of providing targets, aspirational targets for the market, instead of wanting to go out there with trying to explain to investors and analysts what it is that they do. Because I think investors will tell you they have a good understanding. What they want is better targets, and what they want is them achieving those targets. Otherwise, the stock will continue to languish.